Good morning. Thanks so much for joining in. This is Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Now, like the name suggests, this is a show that gets you answers to all of your fundamental and technical questions. So if you are thinking of buying a stock for the short term, then you can send your questions to us. If you are looking to add a stock to your portfolio for the long term, then you can send your question in. You can send them to any one of our social media platforms or in fact on the WhatsApp number that should be flashing on your screen in just a bit. There it is. In fact, if we have the opportunity, we will also take a couple of calls. So if you feel like you'd like to talk to us, then do give us a call on that number. Joining us to answer your questions, we've got Rajesh Agarwal, who's the head of research at AUM Capital, and Rajesh Palvia, who is from Axis Securities. Rajesh Palvia is with us right now. Rajesh, welcome to the show. In fact, let's very quickly take a look at where the markets are right now. We've given up a little bit of ground, and the benchmark Nifty 50, if I'm not mistaken, at this juncture trading with cuts of about 0.5%. Let's pull up the intraday chart for, yeah, there you go. So the Nifty 50 trading with cuts of about 0.4%. But we've got the IT sector that is under quite a bit of pressure today, with TCS and Infosys leading the declines. In fact, it's at the low point of the day, down about 1.99% or thereabouts. What can you tell us about the texture right now, Rajesh?
Yeah, good morning, everyone. So looking at the Nifty and Bank Nifty, both indices are now in consolidation mode, as we have seen a very strong rally in last couple of weeks. Some call writing activities there at around 21,000 strike, 21,100 strike. That is creating some pressure on the Nifty at a higher level. But on the downside, 20,800, 20,700 is the clear put-based concentration at this moment. That clearly shows that, confidence is still there on the street. Yes, ahead of FOMC meeting, some cautious approach is taking place on the market and some profit taking is happening on the stocks where we have seen a very good run-up in last couple of trading sessions. So Nifty is likely to remain in consolidation in range of 20,750 on the downside, and on the high side 20,950. This could be the possible range we can see for some couple of trading sessions, and either side breakout or breakdown will decide the fresh direction for the market. But overall texture is on the buying side, so we believe that we may see a higher side breakout. There is a high probability of giving breakout on the higher side about 20,950. For Bank Nifty, the major support area at this moment is taking place at around 46,800 to 46,700 band. That is the important level at this moment based on the put concentration which is adding up in this decline. On the high side, the major supply zone based on the call concentration is at 47,100. So once we able to take out this 47,100, then possibly we can see furthermore extended rally in the Bank Nifty. So buy on dips is the strategy for both the indices. As the market is giving you opportunity after this strong run up. So this decline one should use as a buying opportunity.
Right. Let's shift focus to a particular stock, which is Laurus Labs. It's down about 2.5% right now, and this comes on the back of FDA observations that it got 5 observations specifically on one of its units. Now, we do not know the nature of these observations, but the market doesn't seem to like the fact that they have got 5 observations. I'll come to you, Mr. Rajesh Palvia, on this. How are you looking at the stock? What are the charts showing for Laurus Labs?
So stock in this session now given a breakdown to its 100-day as well as the 50-day moving average, and stock is almost showing a short built-up kind of activity in today's session. So looking at the data setup on the near-term to short-term perspective, if stocks breaks below 375 level, then we may see furthermore follow-up selling in the stock, and then it can correct further towards a 365 kind of zone on the downside. Though stock was in a recovery mode on the weekly chart, but today's fall is showing us some bit of cautious at this moment. 375 one needs to watch closely. If it breaks below, then yes, possibly another 2 to 3% kind of correction we can see in the continuation of this down move. On the higher side, the major supply zone now is placed at around 384, 385 zone. Until the stock not crosses those levels, there would be supply pressure is likely to remain in the stock prices.
Fair point. Rajesh Agarwal is joining in as well. Rajesh, on Laurus Labs specifically, we've seen an update in terms of 5 observations. What's your view on the stock? It's not done too much in the year so far, and in fact, it's under a little bit of pressure today. Would you say that investors that are holding on to this should continue to hold? And if you are contemplating buying into the pharma space, is this the counter or is there a better option available?
Good morning, Alex. Good morning, Rajesh. Good morning, everybody on the panel. And before I come to Laurus, let me my best wishes for the entire channel, to the entire team of NDTV Profit, and feeling very nostalgic, I would say, because NDTV Profit was the channel where I started my media interaction way back in 2003-04, and once again, it's like coming back home.
We're very glad to have you, Rajesh. We're very glad.
Anyway, as far as Laurus is concerned, see, the numbers were bad in the second quarter too. That's a fact. CDMO segment had a traction. Things went bad, numbers were not that good, and due to which we have seen the market cap falling. And management has reiterated in its investment call that FY24 would be a consolidation year, and anything meaningful will happen in FY25 only. We are positive on this stock for a longer term horizon just because of the fact that its stock has got a very good order book. The biotech business, which is optimized, is going to show numbers by December 23. Non-ARV segment, that's API and FDF, would start improving from next year onwards. So favorable demand, healthy order book, and all these things give us some amount of hope, but investors should be there only if they are willing to be there for 12 to 18 months, not for a shorter period of time. For a shorter period of time, maybe there are better options in the pharma space, like a Cipla or a Dr. Reddy would be a better choice. Or even in the mid-cap space, maybe a Ipca or a Lupin would be a better choice.
Okay. All right, let's start taking queries then. We've got several coming in on YouTube and on WhatsApp as well. But just a quick reminder to everybody tuning in, do send your questions to us live, and Smriti and I will take them, and well, in fact, speaking to you on the chat as we speak to you on the show as well. We've got a viewer, Rakesh, who's asking about a couple of counters, BCL and also Swan Energy. These are two counters that have been bought for the long term, and looking for a view for at least 1 year. What is the prospect from this point? Should they add? Should they exit? This is from Rakesh Bhatnagar, who says that he's a senior citizen from NCR. I'll come to you first on the fundamentals, Rajesh. What's the view?
See, I think both of the stocks are a mid-cap stocks and a short-term stories. I don't think anything long should be taken in this. As far as BCL is concerned, the numbers have been totally discounted in the market price. I think one should try to book profit at this point of time, maybe re-enter at lower levels if it comes. And as far as Swan Energy is concerned, I think they have taken Rolta from the NCLT, and things are going to be better in the longer space. Maybe by longer space, I mean to say by 12 to 18 months, somebody is willing to stay in the stock, one can carry on. But for a short-term term period, maybe next 3 to 4 months, I think there is a correction due, and maybe some amount of correction is there. So one can book profit at this point of time, re-enter at lower levels.
Right. Next up, we have a question on YouTube from Mehek. She's talking about the counter IOC. Now, I'll come to you, Mr. Paravia, on this. If I look at the performance of IOC, it's given about 52% returns year to date. And we've already seen a lot of volatility in the OMC stocks. But on this specific counter, what are the charts showing?
So, IRCTC, as you talked about...
IOC.
Yeah.
Indian Oil Corporation.
Okay, IOC. Yeah. Okay. So IOC, most of the oil marketing company have done well in recent past, and IOC is also moved in sync with most of the OMC company. Looking at the near-term, short-term structure, stock managed to give breakout on its weekly as well as on the monthly chart. That clearly shows that long-term trend has changed. Stock has shown a good amount of consolidation at lower band, and now stock managed to give breakout on the monthly chart. So that clearly shows that some buying interest is likely to be there in the stock for some more couple of weeks. So those who have already bought the stock at lower level, they can hold their long position, as a whole OMC pack is showing good traction on the buying side. So the revised stop loss on the higher side, one can adopt at this moment towards 113. That level needs to watch. If that level not breaks below, then I think there could be another round of rally we can see in a near term to short term basis towards 130, 135 on the higher side, where one can book some profits.
Understood. We've got a question coming in from Guru asking about campus activewear. And now let's pull up the year-to-date chart on this particular one. And we've got a downtick of about 30-odd%, 34% or thereabouts. In fact, the 12-month period, it's down about 40%. The question is, can it be bought at this current juncture? What are the indicators on the charts? And then we'll take a quick view from Rajesh on the fundamentals. Rajesh Palvia, this is a little challenging for me, but on the technicals, what's the view on the charts?
So trend is clearly on the negative side across all time frame. Stock is continuously forming lower top, lower bottom formation, daily, weekly, monthly. All time frame is clearly indicating that, yes, further more pressure we can see going forward. Stock is almost trading near to its recent low, which was formed at around 255 kind of zone. So I think if it breaks again below 255, we can see further more fresh round of selling in the stock. So overall structure is bearish on the weekly chart. Clearly we can see that stock is moving in falling channel, down sloping channel. That clearly shows that the trend is likely to be remain on the bearish side only. Until the stock not manages to cross about 300 level, I think the trend is remain on the weaker side. Sell on rise is the strategy for campus.
All right. What about the fundamental view, Rajesh Agarwal?
See, the stock saw a very good run up after the listing and then started falling just because of the fundamentals. Because at one point of time, it was trading at a P of almost 3 digits, and that's what caused the kind of sharp downtake. And I think still there is some froth left and maybe some more downside on the stock. So it's not justified to buy at this point of time. Maybe a better option would be a Bata or Liberty Shoes in the same sector, I would say. This stock can be bought if another 20% correction comes from the current market price.
All right. Next up, we have a question from Rajesh Maheshwari from Indore. He's written to us about Dixon Technologies. He has already bought the shares at 5,012 levels. He wants to know if it's a buy, sell or hold. Now, yesterday the stock was in an uptrend but has now lost all the gains and is down about over 1.5%. And fundamentally also it has gotten an order recently from Lenovo. I'm going to come to you, Mr. Agarwal, on this. Dixon Technologies, what's the outlook, especially for the longer term?
See, longer term is very bright because of the PLI scheme, the Made in India scheme and all. These kind of companies like Apple, Dixon are going to do well, no doubt on that. They recently got order from Lenovo, as you rightly said. But when you look at the valuations trading at almost 3 times P, and that gives some amount of discomfort. So I think somebody holding the stock for a longer period of time can continue to hold. Buying at this level would not be advised. Maybe some amount of correction is due. After that, one can enter. But for a longer term horizon, it's a very good stock.
All right. We've got a question coming from Dr. Kulveer from Chandigarh, and he's saying that he's been holding Nykaa, that is FSN e-commerce ventures, since IPO time, and he's wondering whether to keep holding this or whether to book right now. I'll come to you first on the fundamentals, Rajesh. What's the view?
See, fundamentals are poor, no doubt. The numbers have been pretty bad, but the positive point is from the last 2-3 quarters, the company has been showing profit. Although the profits are very small, I would say 8-10 crores, but that's another point. The things have started moving. They have started moving into offline stores, around 40 stores. They have already opened. They're planning to open more. For somebody holding from such a long period of time, from the time of IPO, almost 1.5 to 2 years, I think it's not a bad idea to continue holding this stock.
All right. Next up, we have a question from Sujit Sukumar, who's written to us on YouTube, and they're talking about the counter K-Sols. They've already bought the share at 450 levels, and the stock is currently around 1100. Now, I'll come to you, Mr. Palavia, on this. How does it? He wants to know if he should continue holding the stock, or is it a good time to book profits in it?
Can you repeat the name of stock? I am not able to hear you out.
It's spelled K-S-O-L-V-E-S, K-Sols India.
The ticker is currently at 1093.65, Rajesh, if that helps.
Yeah. So very sideways behavior since last couple of weeks. Almost stock is in moving in very tight range since last almost 10 to 12 weeks. So it clearly shows that some accumulation activity or some consolidation activity is happening in the stock prices. We have seen a very strong run up till August 2023. Post that stock is in sideways consolidation. I think looking at the near-term, short-term structure, the major supply zone on the high side is at around 1140 level. Once stock manages to cross over 1140, yes, there could be again a resumption of upward momentum we can see in the stock prices. On the downside, the major support zone is now placed at around 1040 kind of zone. So it's consolidating in very tight range. On the breakout of 1144, one can add the position for upside target of 1250 to 1300. So very sideways consolidation, very narrow price range is happening.
We have to slip into a very quick break, gentlemen, so do stay with us. And by the way, Vasu is got the next question. He's written in from Punjab. Vasu, do stay tuned. We'll be back before you know it. Welcome back. You're watching Ask Profit, and if you're tuning in right now, this is the show that gets you answers to all of your stock-related questions. You can send those questions to us on any one of our social media platforms and also on WhatsApp. That WhatsApp number should be flashing on your screen any minute right now. We've got several questions that are already in. We've got Vasu from Punjab who's written about Harsha Engineers. I was looking up the company. It's apparently the largest manufacturer in India of precision bearing cages. Let's take a fundamental view on this. He's already bought at levels of 428. And let's pull up the chart while we're at it. Rajesh, I'll come to you on the fundamentals. Do you have coverage on this one? He's losing a little bit of ground on this, but he's got a long-term view. Should he hold or should he cut his position?
one should continue to hold. The numbers have been decent, I would say. The order book is good. And the management has shown an inclination towards growing the business. I think one should continue to hold the stock.
All right. Next up, we're talking about Jay Prakash Associate, JP Associate. The question is from Rashida, and she bought the stock yesterday. So from what I can see, they have bought the stock on an up move. It hit 10% yesterday and is still up about 2%. And she wants to know the fundamental view on this. So I'm going to come to you, Mr. Agarwal, on this. JP Associates, how does it look?
See, fundamentals are very bad, no doubt on that. Huge debt, the company has been reeling into problems from a very long period of time. It's not a kind of stock which one should hold for a very long period of time unless some corporate action takes place. So it's better to have a trading view on this.
All right, Mr. Pallavi, I'll come to you on this as well. JP Associate, how does it look on the charts?
So on a technical ground, yes, there is a good amount of buying interest is taking place in the stock, and the stock has shown decent rally in last couple of months. Since last 3-4 months, we are seeing higher high low formation. That clearly shows some sustained buying is taking place. Even on the quarterly chart, also there is a breakout of it's a flag kind of formation. So I think we can see furthermore upside momentum towards 26 to 28 kind of level. That is the next target we can see on the near term to short term perspective. But at this moment, one should place their stop loss at around 20 rupees and upside target is 26 to 28.
Okay. We've got a viewer, Jay Chandra, who's writing in from Chennai on Sanofi India. Let's pull up the chart. It's currently trading up about, let me see what the intraday is, just about 1/3% or thereabouts at 8137 or thereabouts, yeah. So he's bought at levels of 7661 and he's got a time frame of about 6 months. He's looking for further upside. On the charts, how does it look? Rajesh, on the charts?
Sitting on profit, and I think he should hold the position as recovery is taking place in the stock after a corrective move. And looking at the near-term, short-term structure, we do expect that furthermore upside towards 8400 to 8500 we can see in a very short period of time. So now the stop loss he can trail on the higher side towards 7850 and upside target 8400 to 8500 we can see in short period of time.
All right. We have multiple questions on this one, which is IREDA. It's been buzzing for the last couple of sessions, and it's in an up move today as well. The stock is up 10%, even after the price band was revised from 20% yesterday to 10% now. It's still locked in upper circuit. Mr. Palvia, are these levels sustainable? Should they continue holding the stock?
So I have very limited data set up as it is a recently listed stock, but stock is hitting continuously circuit filter on day-on-day basis. So that clearly shows that yes, there is a buying interest and a lot of money is chasing at this moment the stock. That's why the whole day stock is hitting on the upper circuit level only. So I think as stock is already on upper circuit, so there is no opportunity left for the buyers at this moment. But yes, if you get any opportunity in decline or if you get any dips towards 105, 100 kind of level, then yes, it's a good level to again re-enter in the stock prices. Or if you get opportunity to buy even at the circuit price, maybe stock can continue furthermore upside towards 125, 130 kind of zone. So very strong buying action since last couple of days. So I think one can try their luck at this moment also to put their orders at circuit level also.
No doubt, very few sellers in this counter as is evidenced in the price action. But by the way, I would also like to pull up PFC and REC because seemingly the buying in IREDA is also pulling on to both of these counters, which are moving up quite substantially in trade and have been moving up over the past few months as well. Up for PFC about 7% or thereabouts. We've got Hari who's asking about Gallant Ispat, and this is another counter that is doing quite well in trade today. It's up at this juncture about 12% or thereabouts. And on the charts, what is the trend looking like, Rajesh? And can it be bought at these prices for both the short term as well as the long term?
So very strong price action in today's session, and looking at the near-term, short-term structure, stock managed to give breakout of on the weekly chart of its multiple supply zone at around 90 rupees. So now, as the breakout is already done on the weekly chart with volume action, is clearly shows that yes, we can see furthermore upside likely to continue in a couple of trading sessions. We can see at a level of around 125 or 130 in the continuation of this up move. So as he already bought at lower level, so he should now place their stop loss at around 102 to hold the position.
All right. Next up, the question is from Mr. Amit Rastogi. He's written to us on YouTube. He's talking about the counter Aditya Vision. Now, I'll take a fundamental check on this first. Mr. Agarwal, how does it look, Aditya Vision?
You might just be on mute, Rajesh. I think we've lost his audio. Unfortunately, we're having a little bit of trouble with Rajesh's line. And I don't think that there'll be enough. Correct me if I'm wrong. Rajesh, do you have enough data on the charts for Aditya Vision?
Yeah, very limited set of data, and I think stock has already moved around 2% in today's session. Very high ticket size stock. Volume activity is also little low. So I think yes, if you already bought at lower level, so your stop loss now should be at around 35.50 and hold your long position until these levels are not breaks on the downside. And on the higher side, I think this momentum shows that really can be there towards 37.50, 3800 also.
Okay, the very last question, I'm stretching it a little bit. We've got Kaji who's asking about PI Industries, whether it can be bought at the current level. Rajesh, I'm coming back to you on the charts. It's down about 2.3% today, but can it be bought?
So in data, yes, there is a short built-up activity is taking place. There is a consecutive second day where the follow-up selling is happening. Stock breaks now below to its 200-day moving average. Looking at the near-term structure, stock structure turned on the bearish side. So I think one should wait to buy this stock. 33.50, 3300 is the next level where stock can see further more correction. So I think wait for another 2-3% kind of corrective move from the current level to start buying it, as the overall long-term structure is still intact for the stock, and it's a good quality stock in terms of fundamental also. So I think wait for another 3-4% kind of correction, then to again look to buy.
All right, that's all the time we have for today. Thank you, Mr. Agarwal and Mr. Paravia, for joining us and for answering so many questions for us. And viewers, we'll be back tomorrow, same time, 11:30 a.m. Until then, do keep writing us your questions on the WhatsApp number or on any of our social media channels. But more news and updates coming up on NDTV Profit.